Could EQB be the next big Canadian bank? Well, analysts are saying yeah. Today, we're going to talk about what these analysts know. Why are they saying this after so much time? And specifically, we're going to talk about what elements of EQ Bank's business bring them an advantage, and why should we as investors be interested in buying this stock even after all of the amazing performance we've seen in the last couple of years. So first, let's talk about what started this video. Why am I confused about this? Well, it's because I've seen two major articles in the last couple of months about EQB. They're both from major Canadian wealth management banks who have started coverage, which means they've started talking about and advising their clients to buy this stock. What are these banks? Well, first I've got Jeffries, then I've got RBC Capital Markets. Now, both of these guys are incredibly bullish on EQ Bank. They both say it's a buying opportunity. Jeffries has about an analyst average price target. RBC, on the other hand, has a price target around $150 a share. For reference, when I started recording this video, EQ Bank's stock was sitting at about $106 a share. So they're expecting some massive returns. The question for us, what do they know that we don't? What exactly is convincing them that in the midst of all of this economic turmoil, EQ Bank is going to massively outperform? Let's talk about some of the things they mentioned in their analysis. Now, I think the first one is pretty obvious. It's the digital first advantage. I've talked about this for literally months here on the channel. EQ Bank, being a digital first bank, has a huge advantage because that is the way consumer habits are going. And it has been trending that way more and more as time goes on. And so having digital first infrastructure, having their entire business revolve around the idea that there is no branch, you don't talk to someone, you're simply there on the website, on the app, and you can do all of the functions that the bank offers within that experience is huge. Even RBC, a direct competitor in the space, has their wealth management arm saying that EQ Bank actually does this better and has an advantage here over RBC's own commercial consumer banking. That's a huge point. The second thing here, also pretty obvious, it's the runway. EQ Bank right now has what? Let's say a $5 billion market cap. That's being generous. And in that range, they are still a tenth the size of National Bank, or not even in the range, not even in the conversation of somebody like RBC, one of the biggest banks. So let's say they even just caught up to what National Bank was doing today, they would have to 10x their business. They'd have to 10x their market cap, and likely we'd be talking about some amazing returns in the stock. Do I think this is going to happen right away? Definitely not. But there are a couple things they're also doing really well and they're expanding into that might help them get there. Jeffries specifically pointed this out to me, and I think it's really interesting because EQB has gone after some specialty lending opportunities and is going after wealth management opportunities. Now, obviously, this is a business that's incredibly profitable for Canada's big banks, and they have a stranglehold on this industry. It really is just the massive major financial institutions in Canada that have big wealth management businesses. You're thinking of RBC, you're thinking of TD, BMO, these huge brand names with literally trillions of dollars of assets under management. Now, EQB is a much smaller player, but thanks to their smaller size, they only have to capture a sliver, a fraction, a tiny portion of the market to see it represent massive growth. And the wealth management business is one of the most profitable parts of any bank's business. Specialty lending is also huge, especially in a time when we're looking at interest rates dropping radically in Canada. The Bank of Canada has mentioned varying targets for interest rates throughout the year, but based on the most recent data, we could be seeing several interest rate cuts, ending the year with an interest rate somewhere in the 1% range. With that in mind, a bank like EQB could be front and center, capturing market demand as people suddenly look at lending as a more attractive option because the interest rate has come down so much. So what do I think is going to happen here? Why do I think these guys are so excited? Well, I think it's really, really simple. EQ Bank has a massive advantage being digital. It looks like right now is a great time to be preparing themselves, to be putting sort of the infrastructure in place for people to look for loans, for the Canadian consumer to be looking for opportunities to take out debt at a much lower interest rate. And they're able to move into these different parts of the banking industry and grow massively since they are still so small. All of these point towards EQB growing their business. But there's one key element I haven't mentioned yet. It is the PE ratio, the price to earnings ratio, the cost essentially that we're putting on this business. Right now, it's sitting somewhere in the range of 10, which means you're paying about 10 years of earnings when you buy the stock. Now, the key with the PE ratio is to look at its competitors. Now, I did this recently talking about National Bank, which was sitting somewhere in the 12 range with an average industry PE somewhere closer to the mid-teens. Thinking about that, looking at EQ Bank sitting at 10, it is obviously a steal deal. Absolutely underpriced. Now, this is where I think it's really interesting that we suddenly see analysts talking positive about EQ Bank. Risk. Anytime you see a business that should be priced higher and is not, it is because the market is worried about something. And I think you probably know where this is going. The risk in the Canadian economy right now is huge. And being a smaller bank, it takes less damage to cause some real harm to EQ Bank's business. We talked recently on the channel about mortgages and the risk in the sort of Toronto and Vancouver condo market where people had taken out mortgages they could not possibly afford to pay back and had lost enough value on their property that it was actually costing the lender. Well, I think EQ Bank is being held back by some of its own credit, so some of the loans it's originated that are at risk. And with a Canadian economy that is really quite precarious with questions about tariffs and questions about the sort of ability of Canada to grow, it's definitely a risk right now to be buying into a bank stock. But if you're willing to take that risk and you're willing to sort of look past what the analyst is saying and really think about what is this business? Are you willing to buy a digital first bank? Are you willing to bet that the digital consumer is going to continue to come to this bank? Are you willing to bet they're going to continue to outperform and have a nice low cost option, high returns for their users? If you're willing to bet on that, well, EQ Bank is underpriced, has massive growth potential, and even RBC is pretty impressed with what they have to offer, which is many of the reasons why I think this is an absolute steal. And I am willing to buy this for the long run. I think it's not unreasonable that we see EQ Bank drop this year. And that we see that maybe after all the confusion and the chaos and the fear in the Canadian market did sort of slow down consumers' willingness to take on debt and people took less risk. And so the bank didn't make quite as much money. But I don't think that's going to last forever. I don't even think that's going to last for 2 years. I think that really is just the story of the moment. And that if you're willing to wait it out, hold for the long term, you are going to see massive returns. I've talked about this a couple times before on the channel. I sincerely believe this stock could be one of the big 6 banks by the end of the decade. And that would represent one of the best returns available in the Canadian market. With that being said, I'd love to hear your thoughts below. Drop a comment. Why do you think all of a sudden all these analysts are being so bullish on EQB? What do you think they see that the rest of the market hasn't seen yet? And do you think EQB's PE ratio is justified? Love to hear your thoughts. Let me know in the comments below. And if you made it this far in the video, then you are probably into Canadian investing. You probably want to see more content like this. Please do subscribe to the channel and like the video. It makes a huge difference and doesn't cost anything. We just published a video this week talking about the risk in Canada's mortgage markets, particularly dealing with condos. If that's something that interests you, check it out. I will link it in the description below. And with all that being said, I hope I see you in the next video.